Hello and welcome. It is the 17th day of May 2017. Welcome. My name is Derek, and an interesting video uploaded on the Gold Silver channel by Mike Maloney, which is called The Everything Bubble: Stocks, Real Estate, and the Bond Implosion, which has a lot of great information. It's a 35-minute video. He even explains how you can get a free copy of his ebook or a copy of his physical book paying just the shipping costs. I'll put a link to this video in the more information box, as this particular chart is stating, hey, the stock market is, well, it's part of the everything bubble. And let's take a look at an interesting session using the FinViz webpage. And well, the big red block of stocks down 372 points, or 1.75%, 2.5% in the NASDAQ. And if we take a look at the Dow Jones Industrial Average, I mean, right now it's just a move back down to this previous support level. After making this point in here, you can say a double top would form if it can make it down to this previous level, but breaking down the support is what is there for it to break down. And it's been in a large uptrend. Future places where it was before, around 18,000, high 17.7. But also we can notice on here just some of the other ones. First, the currencies. The United States dollar with a very interesting session, breaking down below key support. When we look at this on the daily time frame, this level here up in this February low, barely taken out in March, barely taken out here, and a nice convincing break at this point, and weakness in the US currency. As far as the metals are concerned, within most of these, we take a look at this on a weekly chart for gold. It's doing a lot of different things that we can see compared to silver. For example, gold has made this low, this, and this. So it's made a January low, a March low, and a May low, each of them higher. Within silver, the January low was a matching low and a lower low. It's moved today in silver up to this previous resistance level. So as I've been stating, within this particular chart or movement, there's a straight down plunge in like a 3-week or such, or close to period time frame, going straight down from about 18 3/5 down to 16. It's now finally had a bounce. I don't have the 18 average on here, but it's pretty much in that 18 average band. And at this stage, when you see the market like this, okay, well, we've had our down move, we've had our up push to the upside of this market. And if this goes down and has another test of 16, it's definitely going to be time to go very, very cautious. Ideally, now that you've had some sort of push, you'd like to, it doesn't matter if it stops now or if it stops even at 17.5, but you'd want to see it go down a bit or correct sideways through time. And then after establishing a resistance level field, a break of such. 17, it really hasn't established it yet as a big field. However, because it was previous resistance or support, we'll see now if, of course, this is resistance. But within all of the charts today, most of them had of the similar patterns. They went down and are getting some momentum back to the upside. Copper, not doing the greatest, but it's been holding its late fall rally so far, going sideways. But you can see that the later part of the year, you have an uptrend line, and now you got a downtrend line that pretty much is a similar pattern to a head and shoulders on the break of about 2.5. And palladium has been in just a magnificent roll as of late. And if you look at market trends, it's making a lot of like alligator, crocodile teeth kind of patterns, or however you want to name it. And it's now at an area where you look at the lows. You have this low here at the end of last year, and then the one at the very end of 2016, a little bit higher in January, a little bit higher in March, a little bit higher in April, and here you stand a little bit higher again at this point. However, a significant breakdown below this, closer to 750, then the thing will be getting more towards a neutral state of a view, and maybe test some of these lower levels, maybe around the 700 area. That was a prevalent resistance in the past as well. So this is just quickly going over all of these markets. And again, I definitely want to recommend this video by Mike Maloney, which is the Everything Bubble Stocks, Real Estate, and Bond Implosion, 35 minutes in length. Very well performed, or very well made, and the information is beautiful with a lot of great charts. And the more people that are aware of this, well, you can do something about this. And if you think about just diversification, and I don't like playing the banking system, but if you have a third in the banking system, a third in precious metals, a third in cryptocurrencies, then you're better diversified than having everything in stocks and in the bonds and in cash format, because then you're pretty much 100% in the banking system. And if that system fails, and there's a lot of reasons to believe that it will, then of course you're not going to be in that great of shape. And if you did have, say, a third in the banking system and third precious metals, third cryptocurrency, or even half and half in the bank and half outside of it, if the banking system fails, then that other half should easily cover what you're going to lose on the banking side. If, of course, on the event that our fiat currency system is no longer deemed to be money, or the population whom have faith that the fiat currency system will survive, as taught in economic books, well, if that goes away, well, either one of those two situations, fiat currency is in poor shape. Thank you for tuning in, and have yourself a great day.